You heard a little bit from Jeffrey Wernick before, and the title is my favorite title of the whole conference. Summer 2018 has been the shitcoin purge we all needed. Now, Jeffrey is an early Uber and Airbnb investor, but as you heard him mention, he invests his own money. I always pay attention to someone who invests their own money. Not saying I don't think much of professionals investing other people's money, but it is kind of different, right, if you've had to earn it before you invest it. So he bought his first Bitcoin in 2009. Not a bad time. I hope you bought enough of them. Please welcome Jeffrey Wernick.
Well, first I just say is that nobody bought Bitcoins in 2009. You were just mining early on. And so I can't remember exactly the first year I actually bought a Bitcoin as opposed to mined, because I was mining the first 3 or 4 years. So most of my Bitcoins I got through my mining, and later I stopped mining and just started buying rather than mining. I think one is, I've already spoken a little bit on the panel for, I like Q&A, so I'll give a very brief talk, and I'd like to, if some of you have questions, I'd rather hear your questions and have a conversation than have a monologue. I think one is, I think I'm different than maybe a lot of the speakers, but maybe not like Bobby Lee, who was here earlier, you know, who had his platform and is out, and he's someone that's a believer. As I said previously, you know, everything I invest in, I have a very philosophical belief in why I'm doing it. You know, from a lot of my investments are what I try and do is arbitrage bad, what I believe is perverted government policy. So if you take a look at like quote, you know, the gig economy, I don't really like to refer to a sharing economy because it's not really a sharing economy with respect to Uber and Airbnb. You know, essentially they're a product of an arbitrage of government regulation. You know, government restricts taxi licenses, so taxi fares are artificially high, and so that's a mispricing that would not exist in a free market. It only exists in a market that's distorted by government policy. And housing is also the same way. Its market's just distorted by government policies. So historically, most of my betting has been on betting in markets where they are significantly distorted by government policies, and I look for ways to arbitrage them. So I basically think government is pretty evil, and so to the extent that I can arbitrage evil, that's ultimately what my investment philosophy is. With respect to my interest in, you know, in spite of in reference and deference to other speakers in the past, you know, before here, is many of the reasons why I'm not interested in the blockchain space is, as opposed to Bitcoin, again, just going back to that conversation, is if you take a look at what's going on in the blockchain space now, the ICOs, this conversation about what's a utility token, what's a security token, the KYC process, the anti-money laundering process. So essentially, we sit back and say we're developing supposedly decentralized platforms, but they're all cooperating with government. So if you read the work of, you know, the Satoshi paper and all the Satoshi correspondence, what you can see is a lot of thought given about how to develop something that the government would have no power to stop. So, you know, you hear, if you think about like where the price of Bitcoin is today, the last speaker said that if you're moving money in between fiat and crypto, okay, that essentially the banking system is trying to impose a high price on you moving into crypto. So if you think about how valuable Bitcoin is in a world where every government is actively trying to kill it by increasing the cost of being able to transact in it, I think it's a miracle that Bitcoin is worth over $100 billion market cap today. If you think about, you know, the history of Bitcoin, you know, there's essentially no author, okay? There's no organization. Nobody's being hired. Nobody's being fired. All the growth is organic. There's been no marketing budget. And every government has tried to think of many ways to impede people from either buying it, holding it, or using it. And in spite of that, it's gone up more than any other asset or whatever you want to compare it to, that if you've held that from 2009 today, there's nothing else I think that you could hold where your purchasing power would have grown as much as only Bitcoin. So, and it can't be stopped. You know, if you think about why everything is a distributed ledger, it's not just about the tech, okay? Because blockchain is not new technology. The first blockchain was the cipher blockchain, late 70s, early 80s. So as far as all the tech that comprises Bitcoin, none of it is really new tech. It's the integration of the tech that's really, really unique and interesting, and it is anti-fragile. The financial system is very fragile, and you can see how fragile the financial system is, because look at the support the whole world is doing to sustain the financial system. So I know Jamie Dimon talked about in 2009 that he was forced to take capital. Okay? What Jamie Dimon didn't talk about was when he said he was closely forced to take capital and the institution was well capitalized, he didn't talk about the fact that he was forced to take interest on reserves. So that's a huge government subsidy that the government gave him. Okay, if Jamie Dimon would have had to go out into the marketplace and say, for me to be able to lever up my balance sheet, I need deposit insurance that keeps me a AAA or AA rating, and let me go out to the marketplace to have a private company insure my deposits, okay, do you think he'd be paying the same deposit insurance premiums he's paying to the government? Of course not. So if you look at the subsidy he's getting for deposit insurance, okay, the subsidies he's getting for acting as for the deposit insurance system, the subsidies he's getting for interest rate on reserves, where you give him money and then he invests at spreads significantly above the cost you give it to him, and then he charges you a fee for supposedly helping you preserve your liquidity. And the other thing they didn't talk about is in 2000, when we first had the crisis, the spread between bank borrowing costs and treasuries went up dramatically. It went up 400 basis points. So when about 400 basis points, what did the government do? The government came in and said, we're going to guarantee all the deposit liabilities in the financial system, including systemically important non-financial companies. So have you ever calculated what the cost of that subsidy is? How long do you think Jamie Dimon would have been in existence if he got no interest rate on reserves, if he had to go and price his deposit insurance in the marketplace, and the government never stepped in for free guaranteeing his deposit liabilities? Now, I spoke at Harvard about 8-9 months ago, and I said I don't think he would have survived 22 months, and somebody who was a government regulator said they did the calculation and he wouldn't have even survived 1 month. So this is how fragile the financial system is. If you think about how much support we allocate to the financial system to give the appearance of stability, not real stability, but the appearance of stability, and then look at the performance of Bitcoin relative to that, it shows how durable Bitcoin is in the face of not having a central bank, not having market makers, and not having any lender of last resort, and then having every government trying to proactively work to mitigate the cost of anybody moving from fiat into Bitcoin and then using it in any way. So I would say that Bitcoin is very, very powerful, and I don't think anything has been able to survive the type of onslaught organized by almost every government throughout the world the way Bitcoin has. Now, my comments on the shitcoin community is very, very different, because Bitcoin never did an ICO. Bitcoin never had a marketing budget. So if you think about the ICO process and some of the great performance early on in ICOs and some of the funds that have performed well on the ICOs, you know, I've had a number of problems with the ICOs, and why I call it shitcoins is for a number of reasons. One is, in the beginning, the sales pitch was that when it started first going up, after the initial first of Ethereum and a couple of the other ones, then it began, I could get 10x quickly. So the investors that were attracted into it were not attracted because you're sitting back and saying, let me explain to you why this is a good investment. It's like, I'm going to get you 10x, and let me show you how I've gotten 10x, and I can show you how you can get 10x too. But what the lie that was never told is a lot of these funds, the reason why they get 10x is they get free tokens at allocation, or they get huge discounts, 90% discounts, 50% discounts, 70% discounts. So for the performance, if you ever look at a crypto fund, what you ought to ask the question is, how much money did you make if you compared your performance to buying at the ICO price, and how much of your return is associated with the discount that you got going in? because some of them go in, they get an allocation, they exit quickly, and they're all pressured to exit quickly. And if you ask a lot of the projects, who want to speak off the record, will tell you, I have a problem if I don't get listed on an exchange quickly. So the whole ecosystem was designed for people to basically exit and entry and exit almost simultaneously. So all the incentives were perverse. So people didn't care about if they had good governance, if the tokens really worked, if these were viable business models, because the expectation was, I'm not going to hold things very long because I'm going to have a profit so quickly because my discount is so big that if they end up working out successfully, then I will hold them. And the best example I give right now, the capital markets, when a stock is cheap, okay, company will go back in, they'll go to their investment banker and say, my stock is cheap, here's the evidence, lend me money for me to buy back my stock. So now you have almost all the tokens trading at huge discounts to their ICO price. So supposedly a lot of these funds love these projects, okay? Which one of these funds are going back in and saying, I want to do a tender for these projects because I love them so much, I've invested money in? A lot of the project founders have made a lot of money in it. How many of them are coming in and saying, I believe so much in my token, I'm doing a tender auction on my token? So when you have to take a look at how signaling from the market and information asymmetry, who's out there that's an insider that's signaling that they think their project is so cheap that they want to buy their own tokens back? So far, has anyone seen any significant fund announce, I'm going in, I love my tokens? I've told a whole bunch of funds, that I have friends, I say, why don't you go in and to give confidence to the market, why don't you take your 5 or 10 best projects that you think are your best projects and buy back tokens? Buy back a significant amount of tokens. You have the cash. Why don't you do it? And I've told my friends who have founded projects who have put a lot of money in the bank already, and I said, you've got the net worth to buy back all your tokens. Why don't you do that? So if you really believe in your project, that's what you should be doing. I do know a few people now that are in the stages of actually looking to do that, but very few who I've talked to them want to do that. And I've told them, why don't you go back to my project funds, to the extent you don't have the pocket, go back to your, quote, strategic investor, who you gave a huge discount to, supposedly because they were going to be there to support you, and tell them, now support me, we're really cheap, I know you believe in the project, you tell everybody how much you believe in my project, so you have a lot of cash, buy back some tokens now because they're significantly below the ICO price. Why don't you go back to your funds and have that conversation? And most of them have said they've either gone back to their funds and the fund had said no, or they're scared to go back to their funds. So the ecosystem, I think, is horrible. So I'm staying away from shitcoins, not just because I think the projects are shitty. I think the whole ecosystem sucks. So there's bad governance, okay? There's insider tradings. The exchanges trade against you. So almost everybody's your enemy in the ecosystem. So unless you're an insider at the first round and get out quickly. So when the system starts cleaning it up, and projects think that they have an obligation to actually report information back on how they're spending their money and how they're advancing, then maybe I might start looking at the project. But until they start doing what I think is good corporate governance practices, for me, they're all shitcoins until they begin to do that.
Jeffrey. You rock. Jeffrey!